What's up, guys? It's September 3rd, 2024. Got a trend day in the markets. Daily chart, 45-minute chart. Look at the daily chart. We had gaps open, and now all the bars are closing gaps. So if we continue this, we could see some bull bars. It's been an expanding triangle on the daily. Thank God the 5-minute hasn't been trading like an expanding triangle. Trading expanding triangles are tough. We've been having yeah, I don't want to say anything on that. I don't want to jinx no type of price action. All I'm saying is expanding triangles are tough for breakout traders. You got expanding triangle daily. All the gaps are being closed since August 20th. So if we keep that pattern up, then we should have some bull legs. If this is a breakout and bears want to see follow through, this is the first bear bar closing below the EMA after several micro gaps. So we'll see what happens. Gap down. Remember, this is a bear bar. Breaking below the lower time frame EMA and the higher time frame. 2 seconds, guys. Breaking out below the EMA and the higher time frame EMA. Bar 1 is continuation. I forgot to have the pen tool up. Let me get the pen tool out real quick. Bar 1 is continuation. Bar 2 is follow through. You could sell the close. I waited a little bit because I don't really trade the first 30 minutes, but there's 2 gaps open within the first hour or 2 of the day. So we have a gap here. The low of bar 1 is 21 even. The high of bar 2 is 2050. So there's a 2-tick gap right here. Already bulls are trapped. That's a 2-tick gap. The box is bigger than 2 ticks, but it's a 2-tick gap just so we can visually see it. And then so 1, 2, and then is there a gap here? The low 1325, the high 1250. Wait, 1325. So there's no gap there, right? That's a negative. Am I tripping, or is it 1 point positive? 1 point. Wait, did I even measure this right? Oh yeah. No. Okay, so you see what I'm saying? Bar 6 went 1 tick above. Not 1 tick. The high is 14. The low. So this went 3 ticks above the low, so there's no gap. It's a negative gap. But then we see bar 7 and 8, and that puts in a gap. This gap's a little bit weak because it's a bear gap, but 2 bull bodies, so not the best. So we see multiple gaps. We just have to start thinking small pullback trend, or not long at least until the bulls start closing gaps, and they don't really close any gaps. Bar 1 sell off, gap down, continuation. Bar 2 continuation. Bar 3 is a pullback. Bar 4 and 5, 2 strong bear bars. We have to start thinking about getting short, not necessarily at this exact moment, but just the context for the day. The gap down is getting continuation. Bar 7, third leg 1, pullback leg 2, pullback leg 3. The bars are getting bigger, so it can be somewhat climactic price action. Where are we in the market cycle? Give me 2 seconds here. Well, in the 5-minute market cycle, we're breaking out. On the daily market cycle, we're in a range. So on the 5-minute, we're breaking out. First opposite bar, it initiates channels, and now we're channeling, and we're waiting for that range. When that range gets put in, we're looking for, this is the end of the market cycle. And what we're looking for is a breakout above or below. And we got the breakout below. They actually got 2R of that range, so we can see that bears are strong today. I keep thinking I'm about to sneeze, so I mute the mic and then I don't sneeze. I have, give me 2 seconds, it's coming now. So when the market goes range bound and we get that breakout, the market cycle resets. We get 2 strong bars here, 54, 55. Opposite bar 57 starts the channel phase. Leg 1, pullback 2, pullback 3, we go sideways. And there's more gaps. So it's important to count legs, but we also have to remember it's a small pullback trend, and we can see many more legs, and it can go on way further than we think. So we have many bull bars. Bar 7 is breaking out. Bar 8 is pulling back. Bears have to take profits. Their risk could be getting too big, and we start to go a little more sideways. Bar 13, good bear bar. I think this is strong enough for a small second leg down, and it gets its own second leg down right here. So if you went short 1-to-1, you're good. because we don't really know where the range starts, but we know we're going to be range bound soon after we see 3 legs. So we have to start forward thinking like 3 legs in a channel. Okay, are we going to go range bound, or are we going to go sideways? What are we going to see? Do bulls want to go range bound, break out, or? But if you're trying to buy the dip, I think that's very dangerous. I'm in a couple of discords, and nothing like call it discord. I just kind of read them, like maybe take like prop from discords and things like that. And someone bought this bar, or they bought this bar when they bought somewhere around here, and they were holding. And you have to think, one gap, two gap down. Daily time frame says we're at the top of our range. We've been selling every time we come here. So if you get long, you do have to hit out. You're buying the dip. There's a clear gap by the EMA. The EMA is sloped downwards. That's really important to please pay attention to the EMA. The EMA sloping downwards. If you're not going to sell, at least don't buy. How do I get rid of that? Okay, you know what I'm saying? So think about that. It's okay if you bought the dip. I mean, we've all been there where we think it's going to reverse and we just keep buying and blow up accounts. It's part of the game. Take it with a pinch of salt, learn your lesson, and it does take a while to not buy the dip. I will be honest. I'm not gonna say I'm perfect. I bought bar 47 and I hit out as this was forming because I kind of was the thing is they put a gap on the EMA, so I wanted to hold for that gap. But as soon as it started to get a little bit past the gap, I just hit out and reversed my position and made it back. If there was anywhere to get long, this was the only close above the EMA. So you could argue that that's still not the best long, and I should have waited for closes above that. And I would say, yeah, I probably should have waited for one more bar. I reversed it and made it back, so it is what it is. Just drawing these gaps. When we have these gaps, look how this is a bull bar, bear bar, bear bar, bear bar, gap bar, bull bar, gap bar, bull bar. What we want to see is a bear bar with bear gaps. So like this, look at this breakout here. 54 is a bear bar, and the gap is with 56. So there's probably more sellers laced here than here, because there's sellers above 55, sellers above 56. We go to these bars, there's going to be buyers above bar 8. There's going to be buyers above bar 3. There's going to be sellers above bar 56. So you see how the context between the gaps can be different depending where they're different. Depending on the bars before and after matter, where the gap is positioned in relation to the breakout matters. So all these things matter, and they start to add up to a small pullback trend. Could go, let's see if we got, I don't really measure gaps for PTs, but I just want to see. So they got about 3R of the gap down, which is rare. Strong day, strong gap down, 110 points. It's really rare that bar 1 is the high low of the day, so this is 20% occurrence. So if you look for that tomorrow, just know this was a rare day. We sell off, it gets climactic, bigger bars. When we see climactic gaps at the end of a trend, they can start to reverse, and this is actually a climactic gap that was the first gap that got closed. There's a gap here that actually also got closed, and that was the start of the range bound price action for about 2 hours. It was range bound, but you could still sell the highs and make money. You could sell the lows and hold for a pullback, get out at your entry, or you could sell higher and make profit. Good day. Good way to start off the month for the bears, and we had a trend day. I caught some legs lower, profitable on the day. I'm trading a little bit smaller size. I'm really trying to just get consistent here and perform correctly. I've been studying a little bit of psychology, which is not what I would have expected to say in the beginning of the year, but there's some truth to it. From what I'm the person I decided to study, I pick one trader to follow. I pick one psychologist. The trading style I picked is Al Brooks, and that encompasses multiple teachers. But for trading psychology, I've been looking at Randy Howell, and he has some interesting ideas on psychology. Just check him out. Let me know what you guys think. Hope you guys enjoyed it. It wasn't bar by bar. It's a small pullback trend, and people have been telling me they prefer the 10-minute breakdowns, and I kind of prefer them too because they're 10 minutes. So let me know what you guys think. I appreciate your support. Have a good one, everyone. Yeah, I'll talk to you guys tomorrow. Thank you for your time. and your support. Bye.